Hello, good people of YouTube, and welcome to another stream. Oh yeah, you can't see me. Give me a sec. Hello. Whoa, I'm so bright. Give me a sec. This isn't right. Oh, there we go. It's finding itself back again. Cool. Cool. Hello everyone. Can you hear me? Just let me know if you can't hear me or anything, or if my volume's too soft or too loud. Let me know. Then I can try, set it up again. Because my setup is normally just for my Teams meetings for work, so yeah. Sometimes I move around the webcam, sometimes I move around the mic and stuff like that, so might be a bit off. It was quite a short notice, so we might actually not have that many people come in, but hopefully this talk might help a lot of people, even if they watch this live stream after it's been posted on my channel. So yeah, for people who are here, you know, yeah, for people who are here, then they get the privilege to ask me questions where people online would have to put comments down, and you know, and they'll have to wait for me to reply to them. So yeah. Cool. Is my setup a fail? Cameron, I have no idea what happens now. I think the world will end, riots in the streets, bank will collapse, and society will implode, and the world as we know it will become a post-apocalypse hellhole. Uh, I don't know. Maybe not. Yeah, not sure. Wait, can you guys still not hear me, or am I okay? Can someone confirm for me, please? Anyone, please? Because I'm just chatting away, and like, of course, I don't think there's gonna be many people here, just because, yeah, it was a very short notice. Only put up this live stream schedule probably earlier today in the afternoon, so yeah, wasn't gonna do one for a while, but yeah, a lot of interesting things been happening. Plexia's been acquired by Par Technology or something like that. That was quite interesting. Did not see another acquisition come for Plexia, which is always fun to talk about. But also the technical recession, right? So for people who don't know, New Zealand finally has officially announced it is in a technical recession. It's when the GDP declines for 2 quarters in a row. So that's pretty much, yeah, what's happening here. Cameron, your setup is a fail. I can hear you. Just over half an hour ago, you posted a notification. That's true. Like, wait, no. The notification probably came on to, it's just like a YouTube automated one. I don't send out notifications, right? So I just schedule it, which I scheduled it probably around lunchtime today, during my lunch break at work, and then I put it up on my story and my Instagram story probably like a couple of hours ago. So yeah, the notification was probably just like YouTube, I guess, like sending out automated notifications for my subscribers who have the bell notification on. Oh gosh. Yeah. But I realized I should definitely, yeah, probably give longer notice periods, because the only thing with this is now not a lot of people could join on such short notice. But the thing is, me doing it on Monday, I thought a lot of people would stay home on Mondays, which might work out, but maybe, I don't know. But Mondays work best for me, but we can carry on, because I think this live stream might help a couple of people even after this live stream goes through. So I think as people come in, it's just whatever questions you guys have, just let me know. It is fine to just listen to my live streams like a podcast. I know a lot of you guys like to do that, but at the same time, Sometimes it just gives me more to talk about, and I'm not entirely sure what you guys might be curious about when we say recession, and when we talk about anything, any content on the live stream. It's just good to ask questions because then I can just ramble on for another 5-10 minutes, and it just keeps the live stream going. But yeah, got 6 people here, so thank you all for joining in today. It's fine. I don't hate you if you don't chat on the thing, but let's get into it, right? So let's look at this. So you can see that I will put the news up here. So this one. There we go. So this is what happened, right? So GDP falls in the last quarter, New Zealand in technical recession. So technical recession. So when we say we're in a recession, it's kind of like a thing, it's a very generic thing, right? Like it's high interest rates, a lot of houses in the market, they're not selling for some reason, so normally more sellers than buyers. You also got GDP falling, which is kind of connected to the technical recession because it's depending on the GDP. But you got you got a lot of other things. So how people get impacted by recessions differs per person, but I think it's no surprise, right? So the thing is, the recession, I've been talking about, we're going into a recession from like 2-3 years ago, right? Like maybe 2022, I think, yeah, 2022. I started talking about, okay, I don't like where the stock market's heading. I think there's a lot of greed in the assets market, which is houses, which is stocks, those kind of things, especially, right? So a lot of greed in there. Normally that kind of shows like a bubble burst, like not a bubble bursting yet. So the bubble's probably bursting anytime soon, if not already. But the bubble's growing, right? That's what we say. When the housing market gets too expensive, that happened in 2020 onwards, right? So, house prices got really expensive over the COVID period. Now we're just like sitting with really high house prices. But you got the government or the Reserve Bank putting up all the interest rates, which now people are stuck with their houses, with their high, which they paid a lot of money for. They may have fell already like 10-15%, which is quite unfortunate. But at the same time, some people might just have a good enough salary to kind of ride it out even with the high interest rate, so they didn't bust their asses when they were doing the budgeting or when they were doing the mortgage structure, right? So people who are really tight with their budgets when they got into their mortgage maybe 2-3 years ago, they're going to be like struggling a lot, where people who had a bit of leeway, maybe like a couple of K, extra just in the bank, then you use up that because the interest rates are coming up. But at the same time, you're not really having to go for a mortgagee sale. Mortgagee sale is when the bank sells your house because you can no longer afford to pay your mortgage in a stable manner. Also, unemployment rate. I'm not entirely sure about unemployment rate, so it's something we can look into today. So yeah, a lot of things to look into when we're into a recession. I think a lot of us, if you're in your 20s, it's probably your first proper recession since the 2008 one. I don't really call the 2020 pandemic one a recession. I'd say that's like a flash crash because of an external factor with the whole lockdown stuff and stuff like that. So that was quite an interesting thing, very unique. But I think this recession is more generic, the one that I was looking for, the big one, which possibly could become a depression depending on how things go, even not just in New Zealand but in overseas like China and USA, because a lot of those powerhouses drive the economy, and if they don't do well, then a lot of countries kind of follow behind, because also foreign cash is a big thing, right? So if we hold a lot of US dollars, then we kind of tied up to the US economy, and a lot of not a lot of companies, but not a lot of countries hold US dollars, right? US dollar is the world reserve currency. So it's the strongest currency. So, for that being said, there's a lot to be looking into, and there's going to be a lot of different perspectives of how people view this recession will play out. Is it going to get better in the next year, or is it going to get worse and become a depression? We don't know, but we can always kind of predict by looking at what's given to us. All right, enough rambling. I'm going to start reading the chat. So Chaos, Grim, Tusky, good to have you in the live stream. Ezra as well. Thank you all for joining in today. So, Grim and Rude, is the US in a technical recession? I don't know, actually. Let's see. I think it may have. So, US was in a technical recession back in September 2022. It seems. I don't know. Wait. We can check US GDP. I don't think so, actually. No, I think US is still doing not too bad. No, I can't see anything about US being in a technical recession, but they did confirm one back in 2022. Cameron, we as in a relationship thing. What do you mean? Cameron, I'm at work. I messaged Leanne. She is driving home. She's on leave. She might actually be on the ferry. Oh, jeez. It's all good. She can catch up to the live stream other time. Tusky, I see Choiboy is continuing the trend of robbing me of my sleep. Sorry, Tusky. It is the only kind of time I like to do live streams. Else I don't really have any other time. So my bad. But hopefully it's worth it because it is big news. Cameron, I'm about to wipe out and clear off my BNZ 2.5k credit card. That's definitely the best thing to do, right? Because the worst thing you can do when it's a high interest rate economy, is firstly get rid of your debts and restructure your debts so it's more risk adverse, right? So you don't want to carry on too much risk at this point in time because it's so high, and also having debt in such a time where you're paying so much in interest, it's best not to. So there's people who are not very aware of the economics, the economics or the economy, right? And I had a friend that wants to buy like a Mercedes Benz with finance. Car finance is really, really expensive. It's worse than mortgage, right? It's like nearly double. It's like 13% or something like that, right? It's really crazy interest rates on car payments. So the worst thing you can do in an economy right now. What is with my English today? Sorry. So in an economy like today's, you should not be buying a house. No, you should not be buying a car as it and have it financed, because if you can't buy the car outright, then why are you even buying in the first place? Oh well, I kind of think like that, right? I think later on in my life, if I had like a home loan, I can top up my home loan or my mortgage and buy the car based on the top up, and it's better because you're actually paying like 5%, 6%, and you can always pay it off faster, right? So if you need quick cash, if you don't have enough money to buy a car, but if you think the car's really worth it for you, then you can always use the home loan, not car financing. So that's one thing as well. So there's a lot of different things you need to think about. You can't just do the same thing whether it's a good economy or a bad economy, right? So there's a lot of people who are not balancing their debt to kind of assets ratios nowadays. It's not really the time to be gambling with loans and stuff like that, because you never know, right? You might lose your job. There's a lot of things that could happen in recession, right? Because they announced a technical recession, there's gonna be a factor of people overreacting because it has been announced a recession. And that's never a fun thing to hear on the news, but and people start to not spend as much, and then and it just keeps dying out, and the economic activity just keep going on a decline until we get to a point where we get a hold of inflation and we drive up the economy again. But and as the interest rates go back down, people start buying more things, people start buying more stocks, people start buying more houses and stuff like that, right? So that's all that kind of drivers, so you just got to keep aware of what's happening in the economy. So very important stuff, actually. It's not hard to learn, you just got to put some effort into reading some stuff. I'd say. Tusky, I'll watch tomorrow, I guess, but Choiboy is a perma bear. I'm gonna keep buying everything. I am a perma bear. I am a perma bear, but I think for this time it's for good reasons here, because it doesn't really look that great. Anyways, if you guys can like this video or this live stream thing, it'll be really great, just so I can get on the algorithm. I think today's topic is going to be very important for a lot of New Zealanders, even if they don't get a lot from out of me. A lot of people don't read the news, right? And a lot of people might have missed the fact that we're actually in a technical recession, and maybe they might hear a few things from this live stream where it might help them make better decisions, because for people who will never hear this at all, they'll just start doing things exactly how they would have done in a bull market in a really good economy, and that's how you get screwed. So having a bit of awareness of what's going on in the world in terms of finances and economics is very, very important, in my opinion. Whether you are working, whether you're a student, whether you're a retiree, I think it doesn't matter. You should always be on top of what the economy is doing. Cameron, yeah, payday in a bit, it'll be done and closed. Very good. I approve of that. Grim, please explain the econ clock. Wait, so let's... So what would you... Okay, so let me look at this econ clock, because I'm not an economics major or anything, right? So I'm not gonna be very like... Right, so I guess you're talking about just the economic cycle, right? So the economic cycle is very, very simple. So you have a... Okay, let me look for one, right? So let's look the economic... So if you want to learn more about the economy, then you should look at a YouTube video, which is around 30 minutes, called The Economic Machine. The Economy Machine, or something like that. It's by Ray Dalio. It's a video I really like. He explains how the economic cycle goes over the years of bull run and a bear market and a recession, and what happens in those stages and what to expect. So basically speaking, these economic cycles normally last a decent 8 to 12 years. So we're very overdue, first of all. We also call it a business cycle. So I know it as a business cycle, right? So I'm quite old school. I'm not sure what people call it nowadays, but yes, this is how can I see? So this is what you would see, right? So a business cycle is, if you look at this little graph here, yeah, so you can see we're going up to a peak, and we go for a recession. Then sometimes we go into a depression, and we start to recover and expansion. Okay, there must be an easier one though. Let me see. Yeah, but you can see, right? So generally the GDP always goes upwards. In the long term it always goes up. But the problem is that we cannot always go up. That's the thing. I'm not a student. Okay, what is a really good one? See, so you can see here, right? So yeah. Oh, you can't even see it. Oh, yeah. Give me a sec. Let me move my webcam. Oh, there we go. So you can see this one, right? So this little graph here, if you look here, so you can see the GDP kind of always goes up. It trends upwards over the long term. Long term, we're talking decades, right? We're not talking just years. So recessions and depressions last years, not months. So don't expect the economy to suddenly be like, oh, we're good again. We should start buying things up. That doesn't happen until we go through a phase of depression or recession, right? Because the fact is you're resetting the economic cycle, right? Because what goes up must come down. That's very, very basic facts in any finance or economic matters, right? If the stock market goes up, it has a time where it comes down. We call that a correction or a bear market. Same with GDP, same with the economy, right? It goes up, it gets to a point where it peaks and it comes down. It's because people are getting too greedy. We call this a bubble is growing, right? So a bubble is growing because people are taking too much debt and the debt is getting way too big where people can't, repay them properly and etc. etc. So people are getting too greedy with assets, right? And then boom, it bursts. Then that's what happens. Then is you get to a point where the economy can't really handle the amount of debt and it starts going on a downfall. And to battle that, inflation comes in, and the interest rates start coming up because you want to print more money, and you print more money to stabilize the debt, and the GDP kind of comes down, and that's how we say it's a recession, right? So with the technical recession, you need 2 quarters worth of GDP declines, to announce that, and it just happened for New Zealand. And basically you come to a point where the interest rates will stay high for a bit of time, which is around these red times, until a point where we are kind of at the bottom. Is there's really low amounts of economic activities, and it really helps with. Give me a sec. So sorry about that. So dad came in. So basically what happens is the what was I talking about? Yeah, so what comes up must come down. That's the easy way to think about it. And then what happens is that from here onwards, the interest rates will stay up pretty high for another maybe year or two. We don't exactly know how we can time it. We don't know when it's going to come down, because when interest rates come down, that's when people will start buying up assets and useless stuff. Right? Because right now you can see the interest rates are high, so term deposits are high. It's forcing people to keep money in the bank and get interest from it. And for right now it's around 6% or so, right, per year. Now what happens then is that people are then less inclined to buy assets, right? Like houses or stocks, even dividend stocks, because most dividend stocks in a bull market, they'll pay around 5 to 10% in dividends per year. If your term deposit's paying you 6% and you have no risk of losing your principal value, like if you put 10K, you're not going to lose 10K. You'll get your 10K back at the end of the term, plus you get your 6%. 6% is pretty decent. So people are not going to buy dividend stocks. People are more inclined to, put money in the bank and just, have a term deposit. And that, lessens the amount of economic activities, because, if you're not buying assets, if you're not buying houses or stocks, you're also not buying a lot of useless stuff, because it's a recession. And also what happens in a recession is unemployment kind of comes down and people start to lose jobs, and things get really expensive, so living costs becomes higher. Living costs is crazy in New Zealand, so that's one thing to look at. So after looking at all those kind of things, it keeps the interest rates are high to kind of kind of take the impacts of inflation and, you know, remove, well, not remove, but lessen the impact of inflation over time. And after a year or two, normally they'll start decreasing the interest rates when when they're now kind of telling people, can you go out and, you know, buy some stuff like houses, cars, whatever you want, so we can drive the economy back up again. So, you know, that is the cycle, and it just keeps going up and up and up. If there's a lot of economic activities, normally the GDP goes up, but if there's not much, the GDP goes down. Simple as that, right? So, you know, yeah, it's a now our generations will call this a canon event, but you can't really avoid it, right? Because recessions are there to reset the economic clock, you say, so business cycle. Then, you know, it kind of helps with the long-term prospects of the economy. So, you know, without a decrease or a correction or a recession, it becomes very, very unstable, because there needs to be a point where it needs to redo the cycle. It's a sine wave, right? It's never a parabolic upwards or like an exponential upwards. When stock markets peak, they normally are when the recession is about to happen, especially when the stock market or the housing market, you know, goes up really quickly. That's when the bubble is really about to burst. Because when there's a huge peak that happens in a lot of these markets before we see people exit. And people who exit are smart money, or people who've been in the market for a long time. They start, you know, they start taking profits in the stock market, right? And then, you know, it's a domino effect. It just happens and happens, and it also, you know, it's also driven by recessions, right? Because recessions, then people are now looking at term deposits, so they take money out of these houses and these assets, right? So it's a lot of things to look at, right? So I think that's the econ clock. But, you know, look at the Ray Dalio's video. It's really, really important, I think, in my opinion, about that. Sorry, I need to get back to the chat. So Ezra, I had a look at my debt for my port. It was at 105% as debt until I bought FMG. Then it went down to 95% debt. Wait, what do you mean by that? Cameron, then I can get started on wiping out my 6K KeyBank Visa. Google Pay is a major help. That and having a Vodafone store robbed, allowing me to work as security, giving me the income to pay off my PNCC. I guess. And another thing that happens in recessions or, you know, economic downturns is high crime rate. So crime rate does increase when economies fall, for very good reasons, because people lose jobs, then they start going crazy and they do, you know, regrettable things. So you know, you might see a lot more of these kind of things, more robberies, more armed robberies, more, you know, hit and runs, or more joyriders, so breaking into cars and stealing cars. You know, a lot of these things happen more in economic downfalls. And once the effects of recessions come through, I think it will worsen. Who knows, right? We already had a phase in Auckland where, I think, was it last year or last year? It was just a lot of ram raids and stuff like that, right? So, you know, a lot of those kind of things normally gets worse as the recession goes through. So where are we in the recession? I'm not sure. We could be at the start of it, or we could already be at the end of it. I can never say anything, right? I don't have a magical crystal ball. I never know when it's gonna start or when it's gonna end. We only know that it's a technical recession. And the smart thing to do right now is save cash and don't go too crazy on assets, because the assets are normally on record highs at the moment. And you can see S&P 500 is pretty high, right? So if we look at S&P 500, it was at record high recently, right? Yeah. So you get, if you see the max, see we're a record high S&P. More than 5K is not something we've seen any time in the years, and it's the first time it break through that all-time high. Same with Bitcoin, right? Bitcoin's a bit different because it's a newer investment class, but stock market S&P 500 is a classic, right? It normally does correlate with the economy, but on a delayed manner. The stock market always reacts a bit slower compared to the economy. The economy goes down first, then the stock market follows through. That's normally like a 6 months to a year kind of different in phases. So, you just got to be wary of that, I think. Tusky, compound interest works against you just as easily as it can work for you. Correct. Correct. Yeah, compound interest can work for you, but you just got to look at it from a very long term, long term, right? Because if you look at it from a very short term, compound interest gives you nothing. But that's the thing, right? Like, it only works on things that will go up, over the long term, and it is up to you to find whatever works for you. The stock market never failed to keep going up, even though there were times where we had lost decades. Like even look at here, right? I talk about this all the time. You look at the dot-com bubble. This is the year 2000, right here. Oh, you can't see the graph properly. Give me a sec. I shall move my webcam back here. Cool. So you can see the stock market. This was the high before the bubble burst for the .com bubble, right? This is when Google, Amazon, all these big companies like Microsoft, they all went to crap, right? And the S&P 500 never went back to the all-time high for another good 7 years. Right, it's been a long time. It hit the all-time high again and it dipped again, and it was only around maybe 12-13 years later the stock market finally broke through the all-time high, and it went even higher, which was around here 2013, 2014. This is when it really rallied, and it just kept rallying. See, that's the thing, we never had a proper recession or a bear market since 2009. That's just it, and it's just been going up. We had a flash crash, and look, see, 2020, very, very, very sharp, but very, very quick flash crash. It went even higher. Looked like it's correcting, but it went even higher and it had an all-time high. But that's the thing, it went up so fast. The action's so fast now. It is so scary because think about it. The economy's, not that great. New Zealand, not great, obviously. US, I think there's two sides of the stories. I'm still leaning towards USA will probably go into a recession too. Who knows? But, if the US goes into recession soon, the stock market will be in a bear market anytime soon within the next 6 months to a year. I'm looking at a stock market recession, stock market bear market, so downturn. So the S&P 500 going down. I'm banking on that for by mid to late this year. So I think by end of this year, we're going into a full recession, like you can feel the recession. I think that's what's going to happen, right? So, that's the kind of things you got to think about. Grim and Rude, invest in self-driving cars? No, I don't think so. And let me tell you why. Self-driving cars like Teslas, for example, full self-driving, very cool technology, but it doesn't work well, right? Because roads are not perfect. There's man-made things. It's got a lot of mistakes. Sometimes there's construction. Full self-driving needs. I think when full self-driving comes into play, 80%, I'd say 80% of the road has to be filled with the same technology, full self-driving, right? Because the thing with that is there's so many things that could go wrong because you're still dealing with people, and sometimes they're not very predictable. Tesla do predict accidents and avoid them, but at the same time a lot of them don't. And also there could be a point where Tesla's cause the accident, and you can't do much because the opposition is just normal human, right? You can't do much. So I think self-driving cars is not going to be anytime soon, because it is still way, like, too many people still want to drive. And even if you don't want to drive, like, most people can't afford full self-driving, right? You need a Tesla. Not a lot of people can afford Teslas. Not a lot of people should be buying Teslas with their incomes and their current financial status, right? So that's the thing. If most people are going to be driving by themselves, I don't think full self driving is going to be really worth it, because full self driving, I think it's going to really shine when it starts connecting to traffic lights and also other cars. So it finds the true most efficient way to go from point A to point B. I think that's where the value of full self driving comes from. But we're just not going to see that if we have like 90% or like 95% of the roads being filled with like stupid drivers. As you know, Auckland drivers are pretty bad, right? Imagine having a full self driving. I wouldn't trust my Tesla to drive by itself, because I don't really fully, believe in full self driving yet either. Right, like there's going to be good for most of the time, but there will be few, like a very small percentage of risk where it might do something really stupid or miscalculate things, or other people ruining, the calculations of what it does with its sensors and its cameras and its algorithms, whatever it does. There's going to be so much factors involved. I do not want to risk going into one more accident just because I believed in my full self-driving. So I think that's kind of my thoughts about self-driving cars. I would not invest in self-driving cars as of now. Not yet. Maybe in 20, 30 years, maybe. I'm not sure. But not in the next 10 years, I think. Tusky, particularly at 20% BS interest rate. Exactly. Now, Tesla sales are interest rate sensitive. I'm actually going to sleep now. I have multiple jobs to work. I left a like though. Thank you very much, Tusky. You're probably already gone, but thank you very much. Ezra, we should just go back on a gold standard eventually. Company debt was around 105 debt. Now it's 95. That's the thing. Most companies are the same as, individuals, right? I told you, if you have debt right now, you should be looking into reducing your debt. You should not have debt. You should not have too much debt in a time when the interest rates are really high, because if the interest rates are really high, why are you paying more for debt? And that's the thing. Most people don't have debt for smart reasons. If you have a house, sure, that's fine. I'm not gonna say anything for having a house like a home loan, because people need houses. Most normal families have mortgages. That's fine. My problem is people who have debt because they buy cars they can't afford, gadgets they can't afford, things like luxury items they can't afford. These things are very, very important, right? Like, you look at the mortgage rates. Even the mortgage rates are really bad, and mortgages tend to have better interest rates but than anything else. Personal loans, credit card loans, car payments, they all have really, really bad interest rates, and there is no good reason for you to be spending so much and paying extra for things you cannot afford that you don't need. You tell me. Anyone can argue with me, right? If you're going out and borrowing money or going into credit card debt because you want to buy a Gucci bag because you want to look rich, why? Especially in New Zealand, why? Maybe in Korea I'd understand, because culturally we care so much about how people look and how people dress and what kind of designer stuff they have, and that's how we evaluate people's worth, right? New Zealanders, we don't care if you drive a Mercedes Benz, if you wear Gucci. Nothing changes because we just don't care. Culturally, we don't give a F about anything, you know? And if you have debt because you're trying to make yourself look good, but you can't afford it and you have to go into debt to buy it, why? Like, why? That's a very, very interesting kind of point, right? So Sure, I've done a lot of stupid things myself, but you know, you learn as you get older. But if you get worse as you get older, which a lot of people do actually, you know, it is mind-boggling. You know, like for example, Kiwi Savers came out because New Zealanders don't save that well. You know, they don't save a lot, and when they get to retirement, they're screwed because they don't have enough money in the bank. So, you know, looking at those kind of things, you know, you need to start making more sensible things, and especially in a recession, you should be looking to save more cash. You know, limit your spendings, pay off your debts if possible. You should only have your home loan, in my opinion, or business loans. This is the only things you should have in a recession. You should not have car payments to pay, credit card loans, personal loans, anything like that. Because most of the time, ask yourself, did you buy something that will bring you income, that will make you money by taking that loan? The answer's most likely going to be no for most cases. Cameron, so that's a yes for FSD. No, I do not. See, Teslas are not even that relevant anymore, right? Sure, they make. I don't even like Tesla cars, to be honest, right? Like, not shitting on them, but they're not a very good car company. It's a tech company. It's not a car company. They don't make good cars. Their quality is crap. Um, let alone FSD might have been a bit too early, I think. I don't think we're ready for FSD anytime in the next 5 to 10 years. So I don't think it's really worth looking into that at the moment. Daniel, thanks Choiboy. I was down 80% with Task X Plexure from 2 years ago. Now I'm only negative 3%. You know what's funny though? You know what's really funny? You know, yeah, screw this mortgage rate. You can see the mortgage rates, you know, it's really bad. And you should be saving your money and not doing anything stupid. Ah, Mudo Mudo. Hello, good sir. Good to have in the live stream. Thanks, you too, Daniel. Welcome to the live stream. Okay, so let's look at Plexure, right? So task NZ. I think investors. So for people who don't know, I used to work at Plexure. I'm pretty sure everyone knows now. I used to work at Plexure, which had a reverse acquisition with Task, and they're now called Task. They got removed from the New Zealand exchange, and now they were only on the Australian exchange, so the ASX, and now they have been acquired by another company called Par Technology. Here we go. You see, Task, which was X Pleasure, now it's combined with Task, and they just took the naming Task. Has entered into a agreement for Par to buy out Task 100%. Quite a bit, because it's 81 cents per Task share. I think it was down to like 20 cents at one point, like 30 cents, and it was there for a long time. Let's look. See? You literally doubled your money. If you had Plexure by end of Feb, you doubled your money. You doubled your money. Look at that. That is crazy. That is crazy. My goodness. So yeah, that's quite interesting, right? I did not expect it. You know, if anything, I would have expected Task to be acquired by McDonald's or something, because they had some really good agreement, you know, which would cover a lot of Task revenue for the next couple of years. They had a really good agreement with McDonald's, but now they've been 100% acquired by another company called Par. Don't know much about Par, and also I don't really want to look into it too much, but for what I can see, you can just I don't know. Yeah, there's a lot of things, right? But I don't know what the incentive is. I didn't look into this too much, but yeah, it's quite interesting, isn't it? It's very interesting. Yeah. Hmm. Plexure. Cameron, I will argue with you. because I wanted to use Google Pay, but BNZ had it, but KeyBank didn't. Now KeyBank has Google Pay, and now there's no point in having a BNZ credit card. True. I mean, whatever works, right? To be fair, if you're not, I'm just saying, if you're buying things you should not be buying with your credit card, you should not have a credit card. If you need credit card to live day by day, by all means you should have a credit card. If you can't afford your groceries, or if you can't afford your rent or something like that, and if a credit card will help you ease out during a time like now, by all means. But I'm just saying, for people who misuse credit cards and misuse loans, especially in the economic downturn, that's where the issues are, right? Mudo, get in debt to get the anime wipers. What? What? I'm so confused, but thank you for your comments, sir. But I'm so confused. Cameron, my boss gave me paperwork to sign. Said I had a KiwiSaver. Literally, I had no idea what the hell he was talking about. What? I have no clue either. Cameron, we would have less debt if you paid for our Korean barbecue dinner bill. Man, I can't believe you're going on about this for like 3, 4 years, man. Jeez. Daniel, huddle and take a sleeping pill, guys. Interesting. I think for me, right now, right, for personally for me, I'm more interested in crypto than stocks, right? So, as you guys know, I don't have any stocks in my portfolio anymore. Well, in my public portfolio, I never showed you everything I had in my stocks, obviously for good reasons. But my private portfolio has minimal stocks. I've sold all my growth stocks, first of all. I only have dividend stocks, and I have no stocks in my public account. So the one that have BlackBerry, Plexure, everything, they don't have. I don't have anything anymore, and that answers a few questions why I don't do Sharesies portfolio updates anymore, because I don't have a public portfolio to show you. Also, it doesn't really give people that much value when I just show you my value and my companies, which don't move around too much. There's no fun in that. So I sacked the whole thing, and I decided to just casually make content where it might be useful, so for some people to start researching about certain things, right? So my videos might not be everything of your research for your economic or financial needs, but by all means, it might be a very good starting point for people who don't know where to start. You can start on topics or content I talk about, like today's live streams, and you can dig deep into what causes recessions, what is inflation, how do we battle inflation, what should you do in a recession, what happens if we go into a depression, those kind of topics. I throw these words out to you, then by all means you can learn from me, but also you can start researching more on these topics, because it's very important, right? Like, as I mentioned before, for most people in their 20s and 30s, it would be your first meaningful recession, if not depression. If it does go to a depression later on, we would have ever, lived through as an adult. So, you got to be mindful of that, because it shows you, well, you can learn a lot from here, right? So you can see, you'll be able to learn what stocks do, what the economy does, what living costs looks like, what house prices look like. You live through it, right? And you learn, you keep that in record, so in future recessions and depressions you can act accordingly. And recessions, depressions, they happen every decade or so, regardless of if you like it or not. We call it a business cycle or an economic cycle. It's not something you can avoid. So it's best you learn how to deal with it, first of all. Daniel, share your opinions on yen currency, please. I actually didn't look into much currency stuff, but I will do that really soon. Give me a sec. Cameron, Jack has secrets. He's not even Korean, and it's embarrassing to see the company you left get bought out and make bank on your stocks without you. That's true. How rude of them. How dare they get acquired again and make Plexus shares go double in size and nearly. I would have broken even. Actually, I would have more than broken even if I held on to my Plexus stocks. How rude. Actually, I never expected Plexus to go for another acquisition, so it's not something I can do much. But Daniel, you asked about yen currency. Okay, let's look at NZD to yen. Oh no, let's look at USD to yen. Ooh, jeez, the yen's dying, right? So a dollar, a US dollar can buy a lot more yen. That increased around what? Like 30%? 30% in the past 2 years? Jeez, that's a lot. No, past 3 years, a lot. The yen's screwed. Why? What opinions do you want from me, Daniel? Like, what do you want me to talk about the dollar to yen? It doesn't look good, obviously. You can look at that, but I haven't been focusing too much on forex, so I don't know. I don't know if I can give you much opinions about why this might be happening. But I just know the Japan's economy is not really good right now. Same with Korea; it's not that great. Actually, to be honest, let's have a look at Korean won. Actually, what's been happening? It's not as bad as the Japanese yen, but yeah, it came up a bit though. That's quite a bit because I always had I had like a kind of the easy way I converted US dollars to Korean won was I always thought of $1 is equal to 1,000 won. Roughly around that, right? So it was always around, 1,100, 1,050, 1,070, around this range, right? There's some ups and downs. There's always ups and downs. But, recently it's been going up, meaning, the Korean dollar, the Korean won has been falling behind the US dollar over the past couple of years. So, that's kind of crazy. Let's look at the NZD to NZ. Because, Korea's economy is not good. Japan's economy is not good. US economy is a lot better than I thought. That's very interesting as well. Very, very interesting. Yeah, very interesting. New Zealand and Korean won seems to be just the same, right? It's not changing much because we're both going downhill. Oh man. Yeah, it's definitely not looking too good. But yeah, New Zealand dollar to Korean won is quite stable, meaning we're going downhill, just like Korea. How about yen? Surely we're doing better. Yeah, we're doing better compared to the yen, right? So, the New Zealand dollar to Japanese yen has also gone up quite a bit, maybe around 20% or so in the past couple of years. So, yeah, not good whatsoever. Cameron, Leanne, I have so many questions as well. Yeah, maybe next time. Yeah, I need some questions so I can keep the content going, right? But it seems like I might be cutting it quite short today. But I think just before I finish off the live stream, it was a short notice. So I didn't expect a lot of people to come, but I still had like max 10 people, so I'm happy with that. But yeah, I might finish it off by talking about Bitcoin. I think people should be careful about Bitcoin because we don't know what it's gonna do yet. I like my prediction is Bitcoin might come down to like 45K before it goes up even higher. So I think it might be able to like, you know, just do a big correction before it goes up. I think that's like a bit of a warning for a lot of people. It might not, right? Don't take my words for granted. Like, don't take my words seriously, right? Take it with a grain of salt. But I think Bitcoin's price is going to hit around 45K to 50K before it flies through. Because I don't think it's very appropriate for Bitcoin to be start flying already, especially in a time like now. But that's the thing, when people sell out their stocks, so when S&P 500 starts going down, is Bitcoin price going to go up? That's that's the interesting thing. And would it like transfer like that, or would there be a phase where S&P 500 comes down with Bitcoin, and then Bitcoin picks up like not long after? So I'm not sure what's gonna happen, but that's just my, you know, that's just my predictions, and that's why I'm not buying Bitcoin, or not. I'm not buying that much crypto at the moment. I'm just waiting for the halving to happen, which is happening in late April, because yeah, historically, Bitcoin's price always kind of came down around the halving, especially after halving, and it kind of keeps going down for the next couple of months before it picks up, maybe 6 months to 1 year later. So I'm expecting Bitcoin to fly off maybe in like September, October of 2024. That's when I think it's really gonna fly off. But I think by all means, if you're on a dollar cost average right now, it's fine. But I mean, it's kind of iffy right now. If you have some already, dollar cost average might be fine, but entering right now might be a bit much, because a lot. I know a lot of people won't be able to handle the emotions if you buy in right now, and if you see Bitcoin go down to 50k or 45k. I know a lot of people will sell. They'll be like, oh, we're going downhill. It's not for the faint-hearted, let's say. Cameron, if you cashed up, traded for Korean money, would you still be loaded? Is probably the question. I would still be loaded, I guess, if I were to change to Korean money. Why would that? Why would it change my net worth if I changed it to Korean won? Like, as I showed you, New Zealand dollar to Korean won was pretty much the same. Like, it's stable. If I change all my assets, if I cash out everything and change it to Korean won, I'm still gonna be worth pretty much the same thing. But if I buy US dollars with it, might be a different story. That being said, that only becomes the case if the US dollar keeps going up. But that's the thing: is the US dollar keep gonna go up? Is US economy gonna hold through when every other country goes for a recession? I think not. But US actually has been holding up pretty well. But the economy, I don't think it's gonna last very long. So, that's another question to ask, right? What is actually gonna happen to the US, and how is that gonna affect the rest of the world? If the US goes down, the rest of the world is quite screwed for the next couple of years. I personally think it might even go for a depression. But that's the thing. The biggest difference between the dot com bubble and the Lehman Brothers, the 2008 and 2000 recessions, were the internet is widespread now. Everything, information flows through very fast. People get updated really fast. So the recession or depression, even if it is catastrophic, it might not last a long time. So, there's another thing you got to think about. It's like, yeah, we might see really severe impact in our economy, but maybe for a shorter amount of time, because we recover much faster now, because we're a different world compared to 10, 20 years ago. So, the internet actually changed a lot of things of how we do stocks, how we do investing, how we do, saving, banking, there's a lot of options, right? And it's faster to make decisions and move money around and move assets around. So the impact might still be as severe, but not as long now. Who knows? You know. So these are all kind of things I always ask myself over and over again. Over and over again. It never stops, because you got to keep learning. The economy evolves over time. It never stays the same. But sure, there are historic kind of repeats, but it never really happens exactly like history, right? There's different factors in each recessions and each depressions. Cameron, tell him to prepare for Leanne to be annoying with questions. He needs to do one next week or on Tuesday. I won't be able to do one this week, but I might do one next Monday. We'll see about it. Oh, wait, next Monday is Good Monday. I might do one, I might not do one. I'm not sure about next Monday, but I'll do one pretty soon, hopefully again, and with more notice, but it will most likely be on a Monday night. Whether it's gonna be 1st April or the 1st of April or 7th of April, I'm not sure, but yeah, I will try put it on my Instagram and my I'll try just schedule it on my YouTube live a lot earlier than today. Sorry about that. Yeah, yeah, I scheduled today's one at lunchtime, so yeah. Probably why we don't have that many people, but also my channel's quite dead, right? I just do this for fun. It's not the same as like the pandemic days, but uh, it is what it is. But yeah, tell Leanne I'm sorry, and yeah, she can ask all her questions in the next live stream, all she wants. That's fine. Daniel, I am buying TLT US bond yield 20 plus years for the possible interest rate hike in US Fed. What do you think about diversifying your portfolio by having some US bonds? I am normally for bonds, especially you're correct when a recession comes, we bonds are pretty attractive. Um, I That's the thing, right? The US economy is not as bad as, you know, Korea, Japan, or New Zealand, right? So it's still pretty strong, which is surprising because that's not what I've expected 1 year ago. But that's the thing, would it last for a long time? I'm not sure, you know. So, yeah, would it be a good idea to diversify your portfolio by having US bonds? By all means, I think it's a great idea. Also, you know, you gotta, well, you're making a pretty big prediction that the US economy is gonna fall soon. So, you know, it works however you want to work, but I think it's a fair call, and I would have done the same thing if I were interested in bonds. It would be a good time to buy bonds, in my opinion. For the possible interest rate decrease, when the rate decreases, when the interest rate decreases, you would less likely want to buy bonds. You would want to buy more assets, right? So that no, that's the thing. I still think U.S. economy is gonna fall soon, but if you think otherwise, then you know you should not buy bonds. If the economy falls, I think you should buy bonds. But that's the thing. That's the hard thing to predict, right? Because you know, because we're in a recession, it doesn't mean the US has to. But you know, it was leaning towards that way. But there's a few curveballs that's happened here and there, which I don't really know why. But yeah, bonds is attractive for me, but probably I'm not willing to, you know, settle with such boring returns in general. As you know me, I'm more of a high risk, high reward. But I would rather do cryptocurrency than bonds. But if you want to diversify into bonds, that probably means you want the economy to fall at this point in time, at least. Leanne, I'm coming soon. Is she coming soon? I'm gonna finish the live stream soon. Daniel, usually rate change has inverse proportional relationship of the price of bonds. Uh, I don't know. I don't think so. Maybe I'm pretty sure there's like a delayed effect, right? But let me do a bit of research. No, I don't. I'm not sure. Well, bonds are not really my main thing, right? So maybe I'm not the right person to ask, but yeah. I don't think you'll see like huge rate decreases anytime soon, if that helps with anything. I could talk more about rates because I keep track of more rates. I don't really check bonds in general. And it's been a while since I looked into bonds because I never really bought bonds. So, yeah, the rate probably won't be decreasing anytime soon. I think the rates will probably stay up on these levels, especially for New Zealand, and I think for US as well. It's going to stay in these high levels for at least another year or two. That's my thoughts. So until 2026, I don't think um, the rates will come down any like in any meaningful way. So I think if that helps in any way, whatever you think the bond does, um, yeah, I don't think the rates are gonna fall anytime soon. It doesn't make sense because most countries has not battled out inflation properly yet, so it just doesn't make sense at all. Cameron, till seven figures, you're brave. You know she can direct aircraft traffic, right? She may direct any and heavies over your house. I mean, if she knows where I lives, if she knows where I live, then maybe I'd be worried. But I'm fine. But yeah, it's the chat's dying. Also, there's not too much more to talk about at this point in time. I've talked about the points I want to talk about, so I don't really have much else to talk about. And it's 9:12, so I think people should sleep because it's a lazy Monday. It's too much things to do. So yeah, she can ask questions next time. Yeah. No, I don't like to do live streams more than an hour or two. Um, yeah, especially when the chat's only like one or two people. It's nah, not that much to bounce off, I guess. No, no, we need an update on CBD. Good to invest? No, not in hell. Oh gosh, you guys, Korean barbecue and CBD, that's mad. Yeah, I still have six people watching. I wonder who they are. Anyway, thank you very much if you're one of the six people. I very appreciate it. Sometimes I wish I kept doing a lot of YouTube back when I had a lot of viewers and also getting a lot of revenue. Might have been more worthwhile, but since I've stopped and don't do much YouTube nowadays, it's not as exciting as it used to be. But I do like talking about finance and economy. Obviously, I have lots to learn and I don't know everything about the economy, but you know, it is what it is. I think I will end it there. It's enough for me. So, yeah. Well, the entire investing scene collapsed. I think for New Zealand, yes. For the US, it's still pretty high, right? It's still pretty strong. But I think the US will also fall as well. Then we might see some bigger fall over the year or two. That's my prediction. But, always take it with a grain of salt. Don't know everything. But that's just my hopes and prediction. Because I think we are due for a big reset. We never had like a really decent recession which lasted like a year or two, or at least even 3 or 4 years, like, back in the past. And we might see, situations like back from like 2000 to 2007, you know, same all time high and it doesn't do much and it just dies down again. We might see a lost decade. We actually don't know what's going to happen. But the economy is much different. The information, how information flows around the world is very different now as well. So there's a lot of new factors compared to history. So don't know how exactly it's going to react. But I am hoping for a decline in economy, a further decline in economy, especially the US now, because the US is still holding it, and then that will trickle down to the stocks and housing market. That's my thing, right? As long as rates are high, it it does not it's incentivize people to keep money in the bank, not in assets. That's just the general trend. So, that being said, that's where I base a lot of my simple predictions, right? It's not rocket science. Just speaking very, very high level, surface level kind of predictions. It's nothing too deep down. A lot of other metrics like unemployment and stuff like that, they're still pretty good. So, we still need to wait for that to come down. But, you know, looking at the feel of the economy and technical recession and stuff like that, and how everything's working internationally, it's not looking that great in my opinion. Then that's why I say that. Anyways, I think that's about it. My throat's dying on me, so I'm going to let you guys go, and we shall meet again in the coming weeks. Hope you all have a good week. Enjoy your long weekend. Easter is next week. It's a lot earlier this time, in late March, early April. So enjoy that. Yeah, and I'll catch you soon, guys. Thank you for joining. I will catch you around. Thank you. Goodbye.